All right, what's going on, everybody? This is going to be our Q&A for the first episode of our Becoming an Apex Trader series. In the first episode, we talked about candlesticks. We talked a lot about overlapping wicks, point of origins. We talked about the difference between like reactive candles and aggressive candles, that sort of thing. All right, the first question that we had here, let's see. My question is, a reactive candle, which could be a potential point of origin, would be a valid entry trigger, or better to wait for that pullback? My point is sometimes we may not get the pullback, for example, into a value low after it's already been touched. All right, let me see. A reactive candle, which could be a potential point of origin. I think what you're asking is the point of origin being created itself a trade? Like, is it generating enough information for a trade by itself? Or is it best to wait for the pullback into that point of origin? So that's a good question if that's what you're asking, right? If you have, let's say, a push up and we have that point of origin where it creates a very obvious shift in momentum. The problem with thinking that the point of origin by itself is a trade is we don't know it's a point of origin until that push happens. So there's no way to really predict that it's going to be a point of origin trade because the point of origin requires that second part, that pullback, that shift in momentum for it to be considered a point of origin. For example, if we look at this point of origin right here, it's a very obvious point of origin. We have that really strong sell pressure to the downside after a little bit of buy pressure to the upside, which created a new high. We know in hindsight that that is a point of origin because there was this major push away from it. There's no way for us to really take that as a trade right away. We need to identify that market structure shift before we can label it as a level that we are keeping an eye on. For example, another example here, this low right here. We don't really know that that low is a point of origin until you see that shift in momentum, that shift in market structure back to the upside. Then we can say, okay, now we can pay attention to that candle as a point of origin because we've had that shift away from that level. Does that answer your question? Was that the proper question? Did I understand that correctly? So we don't know that it's a point of origin until we see that market structure shift. So by itself, it is not a trade. Like, for example, if I go back and I just replay this, so just looking at this price action, we can't say there's any point of origin here. The only point of origin that I would say we're looking at with this current price action would be this low right here and that either doji or like that high right there. There's no point of origin here because there is no shift. That momentum is in kind of one direction. So we could say, okay, I'm going to mark out this like low right here. I'm going to mark out this like doji right here. But we don't have anything to mark out right here until we let this play a little bit. And then obviously you had that headline that kind of nuked us. So now down here, we can say, okay, that point of origin has been taken out. That point of origin has been used. So if we want a new level, I could mark out this doji right here as a new level. And then we could let it play again. And then we're basically just waiting for that to hit that level. Or maybe we can create a new one. We can create a new point of origin. But it's a way to find levels to trade later on. It's not a way to find trades right now. So like right now, we have not tested that point of origin. And we have not tested this point of origin. So we're kind of in the do not care zone if you're looking at just a 30-minute chart. We're kind of in a do not care zone because we're not testing those extremes. We're just kind of chopping around the middle. Yeah, it's a really good question. I'm glad you asked that. Let's see. Next question was, I'm a scalper and I trade smaller time frames or smaller trades, they said. Which time frame do I use the point of origin on to make my decisions? So the point of origin is a price action pattern. It doesn't matter what time frame you're looking at. It's going to find the point of origins for that time frame. It's like asking, what time frame do I look for in engulfing candles? There is no answer to that. It's just a candlestick pattern that you can find on any time frame. So you're going to have to figure out which time frame works best for your style of trading. Now, what I like to do, you guys see me do this every single day on stream. When I'm watching the point of origins on a 1 minute, like if I want to find the point of origins on a 1 minute, what I'll do is I'll grab these levels on our 1 minute chart. So I'll just take a look at like the most recent levels. And I'll do this basically every morning. We do our trade plan. I'll go back and I'll look at all the point of origins that have not been tested, which is another thing I wanted to talk about today, is once they've been tested, like if I were to grab like this point of origin down here, once it's been tested a lot like this, I usually just delete it. So either once it's been tested one time or once it's been tested and retested. So like for example, this one here, we could either get rid of it once it's been tested here or on the retest. Whichever way you want to do it, that's perfectly fine. So what I like to do is I grab them on the 1 minute and then I go up to the 5 minute. So I'll leave the chart on the 5 minute, but I'll find the origin levels on the 1 minute. And you guys can do that for other time frames as well. If you want to find them on a 30 minute and then go to a higher time frame or go to a lower time frame, that's perfectly fine as well. It's just a candlestick pattern, so the time frame doesn't really matter. Yeah, I had another question with the same thing, basically asking what time frame. I'm going to get that question a lot during this series, and just a blanket answer for every single time you guys want to ask that question. Time frames do not really matter for the most part. It is personal preference. The only time I will tell you that time frames matter are like when it comes to, say, volume profile. I typically recommend a 30-minute. Market profile, that is typically designed to be a 30-minute. That is pretty much it. Everything else, you can really use any time frame for these setups, these patterns, whatever you want to call them. Some of my patterns work best on like a 1 minute because they're like scalping patterns, right? Like maybe the rollover top or maybe like the VWAP trade or something like that. They work better on maybe a 1 minute because that's what we watch them on every single day. But realistically, it's just personal preference, guys. It doesn't really matter. Whatever works best for you. Whenever it comes down to like structure and looking for like the overall trade plan, the overall market structure, I'm going to say like the 30-minute is typically what I use. I like to find like the bigger picture on the 30-minute. And then like for the scalping stuff, it's like 1 minute, 5 minute. But that's just personal preference, right? I'm not telling you guys that that is what you have to use. Okay, so what am I talking about when I'm talking about like these do not care zones? And this will make a lot more sense for you guys that understand my volume profile techniques, or if once you've watched the entire series, you kind of come back to this, it will make more sense. But basically what I'm talking about is when you're building up those nodes. When you have like a kind of a D-shaped node building up, a very balanced node where you're going back and forth. What that's telling you is the market is not one directional, it's two directional. Both sides, the buyers and the sellers, they agree that this is a good price. They like this price. And what happens when you have a zone like that where the buyers and sellers agree that it's a good price is you get a lot of chop, right? You get this back and forth. So you have to be very careful taking trades during that or managing trades during that because they both like that price. There is no bias there, right? You want to be taking trades or managing trades when there is a bias or when that bias is very clearly shifting. Like if you're going from a bullish bias to a neutral or a bullish bias to a bearish bias, right? When that market structure is shifting. We'll talk a lot about this in the second video that you guys are going to see on Wednesday or Thursday. When you see this clear shift in market structure. So you need to be careful, like I said, taking trades in this zone, but also managing trades in this zone. Now, one thing I will say is this is not the greatest example because this is a very wide zone where there's a lot of price action happening inside this little do not care zone. Typically, the zones are going to be a lot smaller than this, so it's a lot easier to manage saying, hey, I'm not going to trade here. When the zone is very wide like this, and let's say, for example, what is this? This is like a 40-point range. So we'll say this is like a 40-point range. If we have a normal trail that is, say, 20 points, like half this range here, it's going to be extremely hard to manage our trade when the range of this do not care zone is double what we are used to trailing. Okay. So when that happens, there's basically nothing you can do. It does not matter what technique you are using. If the zone is twice as wide as what you're used to trailing, you are going to get stopped out. It does not matter what technique you are using, like I said. If the volatility is so high that it's like 2x, 3x, 4x, whatever, your normal trail, you're just done. Your trade is done. There's nothing you can do. Okay. The technique that I'm trying to teach you guys is when the volatility is about normal or it's lower than what you're used to trailing. This is a way that you can kind of manage your position. And what you want to look for, let's say, for example, like we said, this is a 40-point range. Now, I'm not saying that most people are going to trade like this, but let's just, for this example, let's say that you are normally trailing 60 points. So this do not care zone, the overall range is smaller than your normal trail. So this is not hunting you, right? So if that is the case and the volatility is not terrible, what you want to look for, which by the way, this will make more sense once you've watched the second video, you want to look for these like clusters of candles. It's kind of like a zigzag, right? We want to look for where the overall like clusters of candles are. Is your market structure shifting very obviously against your trade? So like if we shorted, let's just say we somehow caught this short up here, is there a very obvious shift in market structure? So like on the way down here, we don't have a shift. It's going in our favor. And then it breaks down. So it's still going in our favor. Then from like this point to this point, there is a bit of a structure change because you are taking out these prior highs and you're kind of sweeping these prior lows, right? You lost it and then you reclaimed it. So you're sweeping this prior low and you're taking out these prior highs. So there is a little bit of a structure change. So when something like that happens, like I said, it doesn't really matter how much you're trailing by, you're probably going to get hunted. That's probably going to stop you out. So this little move right here, that would have most likely stopped out a lot of trails. Let's pretend like that did not happen. Let's pretend like it did not break this overall structure on these highs here. So ignore this and ignore that. Let's just pretend like it did not break these highs. If that was the consistent level of the high, then everything else below that level does absolutely nothing to your trade because there is no shift in structure. You basically put in a lower high and a lower low, and then everything else stayed in between that structure. You did not break into that high, you did not break into that low, that's okay, you don't care. It does not change your trade at all. Like I said, this kind of traps you and this kind of traps you. Those are a little bit hard. But if we ignore those traps and you pretend like that high was the absolute high, there is no change in structure, so therefore you don't want to close your trade. It's not going against you in any way. If you are closing your trade, you're closing it when it's moving in your favor. Okay? So like if that high is being protected, and we could even argue that that is being protected because it did sweep that level both times. But if you're using a set in stone stop loss, then the sweeps don't matter because the sweeps are going to hunt you anyway. Okay. But if the high is being protected and we are pushing away from that high, then you are closing, obviously, when it's moving in your favor. And that's good. Who cares? You're not going to complain about making money. Right? So you look for structure shifts. Like I said, this will make sense more in the next video. But you look for those obvious structure shifts. If it starts to put lower lows and lower highs, but then it shifts into higher lows and higher highs, that is a problem. That is where you do need to start paying attention. And it's most likely going to start threatening your position or closing your position entirely. Okay. If nothing is changing, if there is no change in structure, like I said, let's pretend like these highs are protected the whole time. And let's pretend like it just keeps going down here. There is no change in structure. It's going in your favor. So lower low, and the highs are being protected. That is good. Okay. So always ask yourself when you're in a trade and you're trying to manage it, is there a change in structure? I got in this trade because the structure was shifting from a higher high to a lower high structure. Maybe it's a rollover top, maybe it's a sweep, whatever. And now after the lower high, we put in lower lows and continued our lower highs. So realistically, the number one thing that would break my trade is if the lower high structure is no longer the case, if we are breaking into higher highs, or if the lower lows are shifting into higher lows. Okay? It goes back to what I talk about with viewing the market as a zigzag and not caring about the individual candles. You're not glued in on the individual candles. Obviously, if the individual candles are ridiculously strong, if they're like giant engulfing candles, then you want to pay attention. But if it's just doing these like clusters where it's just back and forth, there's not really anything changing, you don't care about those individual candles. They're not doing anything. You see, like right here, if we're looking at this as a zigzag, we have lower high, lower low, lower high, lower low, lower high, but then look at right here. You see right here, it puts in a higher low, and then we break this high, and then it breaks that high into a higher high. That is a problem. So if I was shorting up here, and I was seeing all this, when it puts in that higher low, that is a big problem. So I'm going to start to think about closing my trade on that higher low, or when that higher high starts to break. Now, obviously, it can be more sophisticated than this. We'll talk about that later in the series. You can base it on like nodes, you can base it on the EMAs, you could base it on VWAPs, you could base it on the one time framing effect when the candles are all one time framing in one direction, and that one time framing comes to an end. Like I said, we will talk about all that later in the series. But yeah, you want to pay attention when that shift in structure is happening because it's threatening your position. So just like a whiteboard way of looking at that, you're putting in lower low, but then we have a higher low. And it's why we always talk about rollover levels. Because what is a rollover? A rollover top or a rollover bottom? It is a shift in structure. The structure is going from a lower low structure into a higher low structure, or vice versa. The structure is going from a higher high structure into a lower high structure. Now I'm getting a little bit off topic. Like I said, this is kind of more an intro to this second video. The first and second video were very hard to make as separate videos because they kind of are the same thing. They kind of go hand in hand. So it's almost like a part one, part two of the same topic. A lot of this will make sense on the second one. But all right, sorry, I'm going on a little bit of a tangent. Let's see if there's any other questions here. Long story short, TLDR, the question was, how do you manage trades in a do not care zone? You manage the trade by watching the break in structure. If your structure is not breaking, you do not manage the trade. And another thing you look for is if you're in, like, say, a short and you have a cluster of candles here, you do not manage your trade when it is chopping inside that cluster. It needs to push away from that cluster. Then you can use it as a level to manage your trade. So if your stop loss was up here, when it pushes away from that cluster, you can move your stop loss down. If you move your stop loss down while it is chopping inside that zone, you are just asking to get stopped out. Now, the only exception to that is if you're already massively in profit and you don't care that it stops you out. You're just like, okay, I'm ready to get out of this trade. I'm going to tighten my stop loss very tight. And if I get stopped out, who cares? I'm just going to use it as kind of a target. That's okay. But if you're trying to manage your stop loss in a conservative way where you do not want to be stopped out, you're just trying to protect yourself by pulling it down, you cannot pull that down until it moves away from that cluster. For example, let's say that I somehow was like shorting here and I didn't take profit here, and now I'm like, okay, how the hell do I manage my position? This chop right here, I cannot pull my stop loss into these highs until it pushes away from it. So it has to push away from this cluster, then I can pull my stop there. Because then that cluster, hopefully, it's not always going to be the case, but hopefully it's going to act as resistance. So if we push away from it and then we come back into it, hopefully it's going to hold us down and my stop loss is protected. But if I move it right now, I don't know that this like upper portion of this zone is going to act as resistance. I'm just kind of guessing. Okay. Sorry, that was a very long way to answer your question. Let's see if we have any more questions here. Okay, here's a question. This one is very hard to answer. I have a couple of shorts on this. The question is basically, I'm always using terms about like breaks, failures, retesting, when a level is respected or not respected, that sort of thing. They're basically asking, like, when do I know a level is being respected or not? And that gets into something that is extremely hard to teach, because that gets into order flow, reading the tape, reading how the orders are coming in. So that's going to be something that will make a lot more sense at the end of the series. We're going to talk about that in the order flow video, which is the 5th part of the entire series. But a short answer is, once you get to the point where you're reading the tapes, you're reading the deltas, maybe that's either the level by level delta, or that could be the tick-based, the cumulative delta coming in, or tick-based delta. Once you get used to reading that, you can kind of see within like 30 seconds or so whether a level is getting that buy or sell pressure that you were expecting it to get, or it's just kind of ignoring it. For example, like today, we had a couple of retests of VWAP. And as it was approaching VWAP, you basically just saw the seller delta completely not exist. It just stopped existing. The seller delta was happening very easily on the way down, and then it got towards VWAP and it stopped existing. There was just no seller delta below VWAP. So it just switched into buyer delta, and you started pushing away from that VWAP, so we could say it's respecting VWAP. Now, these terms are obviously not going to make any sense until you watch the order flow video, or watch my order flow series on YouTube. But yeah, that's a short way of answering your question. You just get used to reading the order flow and you'll understand if the levels are being respected or not. Okay, thank you, Sean. There we go. We're finally getting some questions. You said, do you add any extra importance to the daytime session points of interest with the added volume as opposed to the overnight point of origins? I got you. So you're saying, like, are the daily ones stronger than the overnight ones? Because they have obviously more value, more volume. I don't really care so much about like what is creating them, like where they are forming, if they're in the overnight or afternoon or morning or something like that. I don't really care about that. It's more so how strong is the market structure shift? Like what kind of shift are they creating? For example, this is probably the most important point of origin on the chart right now because it created such a strong shift in momentum. And obviously it was due to a headline. It wasn't purely technical, which I also don't care about. It's all about how they are shifting the move. How much momentum are they getting on that shift? And normally I would say the more momentum they're getting on the shift, probably the higher the probability that level will be respected in some way. Like when it gets back to that level, it's probably going to get some kind of reaction. Now, whether that be an instant rejection or a retest, I can't tell you. I don't know just yet. I can't predict the future. But I can almost tell you with a very high certainty that it will have one or the other. It will have a strong reaction right away, or it will have a strong reaction flipping it. It's probably not just going to completely ignore it. So basically, you want to see how strong of a shift that point of origin is causing, and that's probably how strong the probability is that it will get a reaction when it gets retested. Do gaps create point of origins? So that's a good question. Not the gap itself. We don't care about the gap itself for the point of origin. We care about the high or low that created the gap. So for example, if I go down to a 1 minute, this is a point of origin. The gap itself, we don't care about. Does that make sense? Because the point of origin is causing a shift in momentum. It's causing that gap. So the gap itself is not an origin level. The level just before the gap, either the high or low, is a point of origin. Here's a good example right here, just kind of scrolling through the chart. There's a million examples I could find on these point of origin levels because they happen so often, but here's a good example where we have this high that very clearly creates a shift. We were going from higher high, higher low, and we finally broke down into a new structure. And then look at the retest. You have the retest of that level and then creates another low. So that's a good example of like where to find these point of origins. You're not just picking every single high that causes a pullback in an uptrend. You're picking the high that is the absolute high that caused a break in structure. So this would be a good point of origin. These don't really do anything. You see how they're still maintaining that trend? It's not really breaking the trend. This is breaking the trend. So I don't think this one was tested. Was it tested? It was not. That was kind of, I guess it was. It was tested right here. So I was going to say like this was another one because that created a very obvious shift in the market. It created a very obvious shift from a downtrend into an uptrend. So if we were to grab this, it was retested right there and kind of retested right there. And then same thing right here. So like this one was used, we can delete that one. This low was also one that caused a shift in structure. You see how this structure is very bearish, pushing down, lower highs and lower lows. And then we can identify this as a level once these highs are broken. So once that break happens right there, we can identify that as a point of origin. And then on this retest and this retest, we knew that was a strong support. And this goes back to the very first question we talked about how do you use these point of origins like right away in your trading. You don't use them right away because you don't know that they exist right away. We don't know that this is a point of origin until that structure breaks. So once the structure breaks here, because it's breaking the lower low, lower high structure, then from every point on, we can use that in our trading. Does that make sense? That is a very key point. So I need that to make sense for you guys. You need to understand when you can start labeling these as point of origin levels and when you can start trading them. Another example here. I'm going to give you guys like 5 seconds just to visualize this. Look at this chart. And let's say I want to mark out like 3 point of origins on the highs. Just kind of visualize in your head where I would mark those out. And then I'll mark them out. So the 3 point of origins that I would mark out are this one, and probably if the market continued, if this wasn't the close of the market, probably one of these. Now let's identify when could we have marked those out. So we're not just doing this in like absolute hindsight. When I could have started marking this one out is probably around here. And I'll zoom into these. Let me mark this up and then we'll zoom in, so you guys can see what I'm talking about. For this one, you probably could have marked it out, probably same thing, around there. And then for this one was kind of still playing out when the market closed, but probably after like this low break right there, we could have marked that as a point of origin. Okay, so let me grab these. And we'll be more exact here. And you'll notice when you see me draw these levels out on stream or like right now, I don't have like an exact science to it. It's not like what I used to do when I very first started teaching this, where I like absolutely picked the doji and I picked the exact level. I don't really care about that anymore. I just kind of generally take the zone of those candles. So this one would have been either this doji here or this like tweezer top right here. I'm just going to take the doji because I usually prefer to take dojis over the other candles. And let's zoom into these one by one. So let's go ahead and I think it will leave my drawings here if I replay. Let's go ahead and replay. And let's zoom in a little bit here. And let's replay it a little bit. So right now, we don't know that's a point of origin, because there's not really anything happening. There's nothing changing here. The trend is still very obviously bullish. We're still putting in higher highs, higher lows. The candle highs are being taken out. It's kind of a vertical distribution, but there's not a break in structure. There is no clear shift in structure yet. Let's play it a little bit more. Now, there is a very obvious shift in structure. Because look at the difference between this uptrend right here and what's happening right here. These lows are being protected pretty much the entire time. Now the lows are not being protected. The lows are being taken out consistently. Now the highs are being protected. The highs are not allowing buyers to take out those levels and to stay above those levels. So there is a clear shift from a buy pressure into a sell pressure. And then once you start to see it down here, it really starts to ramp up. That sell pressure starts to ramp up. So somewhere in this general area where that sell pressure started to ramp up, we could identify that as a point of origin, and we could start looking for that retest. What do I mean by protected? That's a good question. So look at the lows of these candles. You see how the lows are not being taken out and you're not finding a lot of sell pressure below the lows of the candles? This low is not hit. This low is not hit. This low is not hit. So on and so forth. The lows that are hit, like this one right here, it gets wicked. So think about this in a trading sense. If I wanted to be a short trader here, if I was targeting anything that was below the prior bar's low, the PBL, the prior bar low, I am not getting what I want. Unless I am targeting like an absolute break, like a single tick break of a PBL, a prior bar low, I am not getting what I want. Now let's look at this. Let's say I'm shorting in this example, and I'm targeting breaks of the prior bar lows or the prior structure. You are getting what you want. It's breaking those lows and staying below them. Now it really started to do that around here. Like this one right. Sorry, let me make it easier. Right there, that low right there. So this is where it really started to do it. Because you broke that low, strong close. Broke that low, strong close. Broke that low, strong close. That is a key thing you guys need to watch that I don't feel like I covered enough in the first video. I think I talk about it more in the second video. But you need to, and I'll talk about this more in the volume profile section with the one time framing effect. It's called one time framing when you have a prior bar structure constantly being protected on one side and broken on the other side. So if you have a candle, and then you have another candle, and then you have another candle, and you're protecting the bar lows every single time, but you are breaking the bar highs every single time, that is what's known as one time framing. It's typically a market profile term, which we're going to talk about later in the series. But this is a very key concept that you want to look for in any kind of trading. In any time frame, typically 1, 5, 30 minute, or what I like to use, 1 minute, 5 minute, 30 minute. But you want to monitor when there's a very obvious trend. If one side is protecting their side of the candle and then breaking the other side, if that is shifting, right? You'll have this happen a lot of times on 30-minute charts. Where today we kind of had it in the afternoon. In the afternoon, every 30-minute low was being protected. Every 30-minute high was being taken out. So if I was shorting in the afternoon, and I was betting on a 30-minute low breaking and then going all the way back down to like the value low or the low a day or whatever, the chart was very clearly telling you that that was not happening. If you were betting on a target that was outside of the prior bar's low, the chart was telling you that that was not happening. Now, sometimes you won't have that trend, and it'll be kind of two-directional. If you guys go back to my live stream today in the morning, we talked about it being two-directional, where it was protecting both sides of the candle. So about right here is where you would have said that's a point of origin, and you could trade that. You could trade it on a retest. Okay. Okay, so this one, same thing. We don't know that that is a point of origin until you start to aggressively push away from it, and you start to break that structure of that uptrend. So right about there, you start to break into lower lows. This creates a little low here, but it's not really breaking too much. It's not really giving you an obvious lower low. But when this breaks down, this is creating a lower low locally and against this trend here. And because we broke away from that cluster like we talked about earlier, that is now a lower high as well. So because that break happened, we can identify that as a point of origin, and we can look for a retest trade. Now, I didn't talk about point of origins on the lows, but this would be an example right here. Do you guys understand why, like, this is a point of origin, but this is not? They look almost identical. They are quite literally doing almost the exact same thing. This cluster and this cluster are nearly the exact same candle structure. But one of them is a point of origin, one of them is not. And the reason that this one is because of this. There is a very obvious shift in momentum after that cluster. There is no shift in momentum after this cluster. It continues to go in the same direction. That is why these are slightly hindsight levels, right? We don't really know right away that that is a point of origin. We have to wait. You have to be patient. We have to be patient on these levels to form. Then we can identify them. Yeah, the big bars, exactly. And I have a picture of that. Let me pull that up. That's the very first thing we talked about in that video. We talk about the aggro bars, the aggressive bars, pushing away from the battle candles, the dojis, the sideways and neutral candles, right? You want to pay attention to those aggro bars because the impulse bars typically somewhere before that impulse bar is probably a point of origin. Like if we see this aggressive candle right here, we can say that that is a point of origin because that candle is very clearly shifting momentum. Momentum was going up, 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 and then engulfing candle. So not always, but very often, engulfing candles will create a point of origin just before them. So yeah, right here, you could have marked out this like local cluster as a point of origin after the shift in structure, and it did get retested right there. So after this little break right here, that very strong momentum push, it got retested. If you missed that retest, then you could have identified it after that push right there. So either that aggressive bar or that aggressive bar. All right, let's keep going. So this is the one, let me just keep playing it. This is the one that was like the end of the day. All right, that went on longer than I thought, but this one's a little bit harder to identify because the shift in structure is more so a shift from bullish to neutral, not from bullish to bearish. It's kind of going into a more of a neutral chop than a very obvious downward shift. So you are still shifting momentum, but it's not like an aggressive shift to the opposing side. So this one is a little bit harder to identify. But where you can identify it is look at the structure here. Higher high, higher low. Higher high, higher low, right? But then this one sweeps the high. I talk about this a lot in our next video. You'll see it on Wednesday. A sweep is almost always something that you will see when there is a very obvious shift in momentum. It's kind of the warning sign that there is a shift in momentum happening. Because what a sweep is telling you is, we broke that high, which was following the structure that we were currently in, but then it swept, it re-lost that high, so now the other side is showing momentum. So then if it really starts to shift structure, a sweep turns into what? It turns into a rollover. The rollover top trade, literally all it is a late entry to a sweep trade. Because the sweep trade, if you think about a rollover top, what a rollover top is you have like a high, and then a sweep, and then a high. It's kind of like a head and shoulders, right? It's not exactly a head and shoulders, but very close. That's why it always looks like a head and shoulders when I draw it out. But all it is you're taking the late entry to the sweep. If you missed the sweep on the high, you're taking the late entry, the lower high. And what is the lower high? The lower high is the shift in structure. So we have that sweep, and then we start to push down. And once it starts to break that structure, then you can identify that as a point of origin. So a very key thing to look for is that shift in structure. Going from higher highs to lower highs, or lower lows to higher lows. Somewhere in that shift, there is a point of origin. If you mark that level out, that zone out, you can look for those trades. Whether that be a retest of that zone, or maybe they break it and then rebound into it. You will typically get some kind of trade in that zone. Yeah, I can't really talk about entry timing and all that stuff until the entire series is over. So that'll be stuff that we talk about more in the later episodes. As I said in the first video, I said that I couldn't really give you guys trade examples in the Candlesticks video because I do not take trades purely off of candlesticks. So in order for me to like give you guys, hey, you could sell here and put your stop loss here and put your target here, I would be lying to you if I was saying that just purely on candlesticks. That's not how I trade. I need you guys to understand the other concepts before I can go over that stuff. Yeah, Sam, I answered that question. I don't know if you were in here earlier. But that was another question that I said that I can't really answer that in its entirety in this episode. That is something that will make a lot more sense at the end of the series. That is something that you have to understand order flow to understand. That's kind of the purpose of order flow. Reading how the orders are coming in, whether that be on the tape or the delta or the DOM. Reading how those orders are coming in, reading how the pressure is changing. That is what identifies the level as being respected or not. Now, if you're just like a pure candlestick price action guy, then obviously you could say there are ways you can do it with just candlesticks, whether that be like the wicks or how the candles are reacting to the levels. Like, are they instantly hitting it and then sweeping it? and then pulling back, that sort of thing. But that's not really what I'm looking for. I'm looking for more so how the orders are coming in on the tape or the delta. Yeah, exactly. So, like, identifying the point of origin levels is not a knife catch or a calling a top type of pattern, right? You're not trying to predict where the bottom is going to happen, where the top is going to happen. It has already happened. That shift has already occurred. Now we can grab that level and see if it's going to give us a trade later on. All right, guys, I appreciate you watching the Q&A for the first episode in this series on the DBT method. This was on candlesticks. In the following episode, we're going to be talking about market structure, and then we're going to go into indicators, volume profile, and finally, order flow. If you guys enjoy this series, be sure to hit that like button and subscribe, and I will see you guys in the next one. Peace, everybody.